We sit down with Shelia Weinberg, the founder and CEO of the Institute for Truth in Accounting, which examines state spending and budgeting issues, and talk about why she started the organization, as well as the cost to Illinois taxpayers for state spending, and whether or not there is a point Illinois goes over the financial cliff. This runs about 30 minutes.
Shelia Weinberg, thanks for joining us again on the Illinois Channel.
Oh, thanks for having me again, Terry.
It's been a while. It's good to see you, but sadly, our economy is, and our state finances are no better off since the last time we spoke. You run Truth in Accounting, and tell us just briefly, what was the motivation for starting it? You had a problem, I know from one of our prior conversations on camera, that you weren't trusting the numbers that the government puts out, either at the federal level or at the state level. Is that more or less the...
Yeah, that's right. And, I started it over, honestly, the 2000 presidential election when I realized that there was a lot of debate on, I don't know if you remember, Bush was saying, hey, I'm going to return this surplus. Remember, there were surpluses as far as the eye could see we had back then. And Bush was going to return it to the American public in the form of a tax cut, and Gore was going to put it in the lockbox. And I'd studied the federal budget, and I understood that there really wasn't a surplus. In fact, if you handled Social Security at that point as like a private corporation would handle a pension, we were actually running a $500 billion deficit just in that one program. So instead of talking about this, fictitious surplus, and the debt was going up at the same time while we were running a surplus, which I didn't quite understand. We should have been talking about, hey, the baby boomers are coming up, retiring, what are we going to do about that? But we were focused on the wrong thing because we had the wrong numbers. And so once the election happened, I'm like, let me get this straight. We just elected the leader of the largest financial organization in the world, the federal government of the United States, based upon the wrong numbers. And I'm not a complainer, I'm a doer. I really felt that I needed to educate the public about the true numbers and try to get the governments to start to produce them.
So 16 years later, one of the really interesting things that you've developed is a website, and you call it, what is it, datalabs.org?
It's called statedatalab.org. It's a sister website to our truthinaccounting.org website. And what we did is we got to that by, every time that I spoke on the federal financial problems and how they budgeted poorly, people in Illinois here would say, well, if you think the feds are doing bad, you should see the state of Illinois. So we studied the books of the state of Illinois, i.e. they were telling us every year that they were balancing the budget. So the public thought, hey, well, everything's fine. They must be spending within their means because they're meeting the constitutional requirement to balance the budget. But we found that they were not including a lot of their employee compensation costs. They weren't including the pensions that employees were earning every single year, and that the state was incurring that compensation every cost, and they weren't including the retiree health care cost. And in addition to that, to make it even worse, they weren't including those liabilities on their balance sheets. The pension liability or the retiree health care liability. So we felt that citizens and their elected leaders were making financial decisions not knowing the true numbers. So we took it upon ourselves to calculate the true financial condition of not just Illinois, but every single state in the state. And from that we developed something called the taxpayer burden. So we took, here's the assets of the state, here's the liabilities, and how much money do you need to pay those bills? And we divided that by the number of taxpayers in every state to come up with what we call taxpayer burden. And the taxpayer burden represents the amount that each taxpayer in the state is going to have to send down to Springfield. In this case, Illinois, right now, we have a $45,500 taxpayer burden. So each
per citizen, which means even if you're 5 years old, that's your burden.
We actually call it's called a taxpayer burden. So it is actually
by taxpayers.
It is taxpayers.
Okay, not per capita.
Not per capita.
Okay.
And that's $45,000, $500 per taxpayers. So, but those taxpayers are going to have to pay that amount of taxes in the future, and they're not going to receive any goods or services for those taxes. So in Illinois, it's $45,500. New Jersey's actually worse, and Connecticut's actually worse than Illinois. But once we developed this taxpayer burden and started to compare states, people would say, well, you're not looking at a whole picture. You know, for example, Connecticut would have a higher GDP than Louisiana, or they might have higher median income. So, you know, you're not looking at everything and we're like, oh my God, we have a large enough study. Do we need to include that in our studies? So what we did though is we developed a website because we couldn't find one. There was no website where an ordinary citizen could go in and say, how is my state doing compared to another state? You know, how do we have more people leaving the state? Do we have more attorneys in the state? Or is, you know, which state is the best to do business in? There was no website to do that. So we developed something called statedatalab.org, a sister website to our truthandaccounting.org, where citizens can go on and they can generate charts. They can go select Illinois, Wisconsin, say, hey, maybe if you're thinking of moving, you could select Texas. Is Texas doing better than Illinois? You know, which state's doing better? Then you can generate a chart that shows you exactly what's going on and how to compare those states.
So as we look at Illinois, you said it was $45,000, but per taxpayer. What is the actual pension deficit right now? That's a number we often hear, but I don't know that we typically get an accurate number. Do you know what the accurate number?
We use the numbers that the state's
The unfunded,
actuaries
yeah.
calculate. So we look at their assets that each pension plan has available, and then the benefits that they have promised. And that number, the unfunded pension liability, is $118 billion at this point in time. So that's part of the $212 billion that we include in calculating how much money is needed to pay the state's bills.
Now that money, the $118 billion, that would be needed to pay those pension benefits, but obviously not all like next year. So over what period of time would those be needed? You've done like a life expectancy on the recipients?
Well,
or?
the actual, you know, we don't calculate the
Not
numbers. We
personally,
actually
but
use the state's actuaries calculate them. So it is over the lifetime of the employees how much you're going to have to pay. But I must emphasize, this is the amount that they have incurred to date. This is the amount they've already promised. This isn't talking about how much, you know, employees are going to get, you know, earn in the future. This is how much they've just incurred to date. So it's similar to a business, looking at a business. If the state of Illinois shut down today, it would have to come up with $118 billion just to pay the benefits that have been incurred to date and earned to date. So those numbers will just continue to rise unless more assets are provided to reduce that unfunded liability.
And that's just one of our unfunded liabilities. There's the health care costs and other things. What would you say is the state of Illinois, not legally, but practically bankrupt?
Well, it depends on your definition of bankrupt. It's not, as you say, it's not legally bankrupt, but the Webster Dictionary definition of bankrupt is where an entity does not have enough money to pay the bills that they have. So obviously Illinois is $184 billion short of assets available to pay the bills that they've accumulated to date. So under that definition, the state of Illinois is bankrupt. The great thing that we have this year, which we haven't had in the past, is that the state's balance sheet finally is reporting the net pension liability. It is reporting the liability of the state. Previously, about more than 50% of the pension liability was hidden off of its balance sheet. We worked for years at Truth in Accounting to get the Governmental Accounting Standards Board to require the state and other states to put their pension liability on their balance sheet, and this year that liability, if you go to the state's audited financial report, you will see it. Now, but also, even in addition, you can go to your own local government and see theirs. So I can go to my village of Glencoe and finally see how much pension liability Glencoe has, how much Naperville has, how much the city of Chicago has. So it's greater transparency. for the citizens. And in 2 years, the governments are also going to have to put their retiree healthcare liabilities on the face of their balance sheets. So
in 2 years.
In 2 years. So in 2 years, they'll have a full picture. But this year, exciting for us accountants. I don't know if it's exciting for other people. This the pension liability is finally on the face of the government's balance sheet.
What are the taxpayers? I mean, here in a democracy, we're supposed to make decisions based on, hopefully, solid information, which is what you're providing. What are we to make of it? I mean, the average person is going to hear, I'm not going to put $45,000 toward the state of Illinois to pay their bills. I mean, I can hardly pay my bills.
Well, one thing that they should do is, they should, well, what Thomas Jefferson once said is, that an informed electorate is the basis of a sound democracy. Well, unfortunately, we have a misinformed electorate. So citizens do need to get themselves more informed about this. When you hear the governor or the legislatures or the mayor or your local officials say, we are balancing our budgets, you just go ahead and say, no, you're not. You're not including all the cost. So I guess what they can do is be very skeptical about the information that they're getting provided and demand that, no, you need to include all the costs when you balance your budget. Because what it's allowed them to do here in Illinois is expand the government beyond what the citizens are willing to pay for, because the citizens haven't known the true cost of the government. So that's a problem.
Do you talk to legislators, and counsel them on this when there's some proposal before the state, or do you just counsel them and say, here's what you're facing?
Well, what we do is we counsel them on here's what you're facing, the $184 billion financial hole. But we also counsel them on something called fact-based budgeting, which is full accrual calculations and techniques. The IRS doesn't allow corporations to do if you make more than $5 million, you can't do your books using cash basis or checkbook accounting. But that's how the state does its billions of dollars of budget. It does it on a checkbook basis. So what that means is, okay, the state's constitution says it's only money in and money out, okay? So specifically, the state's constitution has a constitutional requirement to balance the budget. So, but what it says is your funds available have to equal your expenditures. So, if you borrow money, that becomes available for you to spend. And it only says expenditures. So you'll hear a lot about these unpaid bills. Well, this is a function of this definition of expenditures. So again, it's only the checks you write. So if you get an invoice from your vendor and you don't write the check for it, you don't have to include that in your balanced budget requirement. So these are the games they play. And the other thing is that
even though you have a drawer full of bills, you have $1 billion worth of bills.
Well, in Illinois, we're up to, I think, about $9 billion
of unpaid bills.
This drawer is full of $9 billion of bills. And the comptroller's job has pretty much become sort of like, if you don't have enough money to pay your bills, it's like, okay, I have this $9 billion of bills. Which one? I only have X amount of revenues. Which revenue? Which are we going to pay? So we recommend fact-based budgeting. Go ahead and include all your costs in your budget, and all your expenses and all the invoices that you've gotten, and also only include the revenue that you've earned. You cannot include loan proceeds as revenue if you're truly balancing your budget. So we're encouraging the state to do that and local governments to do that. Honestly, we've had a really hard pull in Illinois to get legislators to do that, because they would be using the truthful numbers to balance the budget. And they come back to us and say, Sheila, we can't balance the budget using the bad numbers. Why do you think why would we want, there's no way we could do it using the good numbers. So what we've said is, okay, go ahead and balance the budget any crazy way you want to. But before you pass the budget, go ahead and do a pro forma income statement and a pro forma balance sheet. What are those going to look like once this budget has been enacted? So, for example, this year's financial statements for 2016 will probably show
for the state
will probably show between a $4 to $9 billion deficit. Well, that would have been good to know before we pass, quote, a balanced budget. You go ahead and pretend you're balanced, but before you pass it, let's go ahead and figure out the reality of what it is.
Now, have you looked at Chicago as well? As far as
we have looked at Chicago. I can't remember the newest numbers off the top of the head. The numbers I remember is when we did them a couple years ago, and that was $28,000 per taxpayer. So
if you're a resident of Chicago, you have that $28,000 on top of the $45,000.
Yeah, and then we did Cook County, which was about $3,000. The Chicago Public Schools, and that I think was about $19,000. And then you have to add the state on top of that. Altogether, the last time we calculated, it was more than $78,000 per taxpayer in the if you're
living in Cook County in Chicago.
Yes. So and again, these are taxes you're going to have to pay, and you're not going to receive any goods or services for those.
Because that's going to pay maybe someone to be retired in Florida.
Right. And you're saying, well, I can't really do that. I'm not going to pay that. Da 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 da. Well, again, when the mayor comes out and says, "I've balanced the budget," or CPS comes out and says, "We've balanced the budget," you need to ask them, well, okay, the mayor, you've told us every single year that you've balanced the budget. Your $1 to $3 billion, your audited financial statements show that you're $1 to $3 billion in deficit, even though you keep on telling us you balance the budget. Are you going to really balance the budget this year, or are you just pretending that you're balancing the budget? And one of the reasons that Chicago's in horrible shape is, again, just like Illinois, the pensions. But the mayor has only been paying 1/3 to 1/4 of what he should have into the pension plan. So it's kind of like you complaining to me, well, I'm in horrible financial shape. Well, you haven't even been paying the minimum on your credit card, okay? So he's not been paying the minimum on the pension, the city's pension credit card.
The pensions, both at the state and at the city of Chicago level, and any number of other places, am I correct in saying the real issue there was that they weren't making a large enough contribution? People would say, well, we wouldn't have had a problem with the state pensions if they had been making their payments all along. I tend to think they would have had a problem anyway, that their contributions weren't really large enough to match the size of the benefits. Am I right on that?
You would not have an unfunded liability of $818 billion.
No, but you would not that high.
If they were making the contributions to match the pensions. So two things that they did is, one, each year, it's not, this is rocket science. But they do have rocket scientists to calculate how much you should put into the pensions. And the actuaries told them every single year, here's how much you should put in, and every single year they did not put enough in. And then some years they did like benefit enhancements, so they even increased the liability larger than what it should be, what it was in the past, but they didn't fund it. They just said, here, have employees have all these benefits, but they didn't put any money aside to pay for those benefits.
How do we stop those in government service from doing this, from basically bankrupting our communities or our state?
Well, we would say go ahead and require fact-based budgeting. Include only the revenues that you earn, include all your expenses. Go ahead and make sure those pensions and retiree health. Right now, state and local governments do not fund those retiree health care benefits. So the employees, they promise them to the employees, but they don't include any money set aside to pay those. Well, go ahead, and we would say your budget really isn't balanced if you're not setting money aside to pay those. So go ahead and require that your budgets be really balanced, including pre-funding your retiree health care benefits, including the proper amount into your pension into your pension plans. Let's get started that way. And then I always tell people, truth in accounting, we don't have any here's the silver bullet to fix this. But what I tell people is we have a cash shortfall. In Illinois, we have $184 billion cash shortfall. The only way to fix that is to bring more money in or take less money out of the system. And so be careful when there's reforms that are being proposed in the state. A lot of times they have a tendency to do the opposite. There'll be tax cuts, which would bring less money into the state, or there might be benefit enhancements, which would require more money to go out. But so keep in mind, when all these politicians are spouting, hey, here's how I'm going to fix it, does that bring more money into the system, or does it take less money out? And if it doesn't do one of those two, then they're really not fixing the problem, they're making it worse.
When you look at, I don't know if you have an opinion of it, but when Governor Rauner was saying, I mean, he would argue if you cut certain taxes, or maybe he would even say if you just cut regulations, that would lower the cost of doing business for business. And that the only way for us to dig ourselves out of this hole is not to tax our way out you could do some new taxes, but the size of the problem is so big that you really just need to be able to grow the economy, create more jobs,
Right.
Or have people move their businesses to Illinois. Do you have an opinion on whether he's right on that?
Well, again, if you grow the economy, you get more tax revenue in, you're obviously bringing more money into the system. There does need to be analysis that, yes, the things that are being proposed would actually bring more business into the state and generate more income taxes. There does need to be an analysis, and we haven't done that analysis. We'll leave that up to other people.
Have you done an analysis of when is the day of reckoning? Because we've been hearing about this crisis that's been coming at us, both at the state level, the city of Chicago level, and the federal government's going to have a problem with its retirements and with Social Security as well. Is there a point at which we go over the financial cliff?
I believe here in Illinois, it's when the lenders just say, enough already, we're not going to lend you any more money. And the state will have to miss a payroll. Until then, I would say that we're already there, though. We're already there. So, for example, we're not paying bills on time. We don't have enough money to pay our bills today. We're in essence bankrupt today. And this is costing us today. So, for example, the interest on the vendor bills. So if the state doesn't pay a vendor bill on time, which remember we have $8 to $9 billion hiding in a drawer, those earn interest.
I believe it's 12%.
Yeah, it's 12%, 1% every single month. Well, in 2013, that was $323 million that we had to pay on interest alone, and I'm sure it's going to be higher this year in 2016. So I think that's a crisis that we're spending that much on interest. There's been a time where we went out and tried to borrow money. Well, we couldn't borrow money. The market said at that interest rate, we're not going to lend you money. So therefore, we had to go back, do some pension reform, which was overturned. But so now the borrowing market is actually doing policy for us, and that seems, that's a crisis to me. And so there's many things that are going on right now that are already a crisis. That, oh yeah, the doors are not shut down. Vendors aren't being paid. School districts aren't getting paid. Universities aren't getting paid. For some of those people, that is a major crisis. Okay, there was a cute story. I don't know if it's cute, but in the paper recently about one of the state legislators driving for Uber. My state rep was renting an office space that a former state representative had. It was more expensive, further away from his house, but he couldn't move to a cheaper place because the new landlord would not take a lease from the state because they didn't want to wait for 12 to 18 months to get paid. His children and other state employees, they have to have cash in order to use medical facilities because, again, those medical facilities won't wait the 12 to 18 months to get paid. So we're already in crisis. Nonprofits are going out of business. We're in crisis in Illinois. Just because we have enough tax revenue for the comptroller to go, okay, well, I have $184 billion of bills. I have $200 million of cash, so I'm going to pay, such and such. Just because we can still do that doesn't mean that we're not in crisis.
We just avoided a crisis, at least an immediate crisis, when they passed a funding bill because we had some municipalities that were lending money to the state, and the state wasn't paying its water bill or its electricity bill for things like prisons, and they were going to cut the state off and cut the water off to the prisons. So, I mean, it could hardly be more dire. If you were the governor, what would you do?
Well, what I would do again is, pass fact-based budgeting right away. At least, let's go ahead and tell the public where we're at, where we truly are or aren't balancing the budget. And then, you'd have to come up with proposals to either bring more money in or take less money out. Truth in accounting, we're not specific about that because we are, hey, here's the numbers. Once you guys figure out the problem, hopefully this will make you realize that you have a problem and you will work on it. If we went ahead and said, well, you need to, say, raise taxes or cut spending in order to fix this, then people would say, oh, your numbers just look really bad, just so you can, get your agenda passed. And we don't want to be accused of that. We're just neutral accountants. Here's the numbers. You guys know the facts. Fortunately, you're asking me what we can do about it, and I always claim victory at that point that, oh, well, now you understand the situation, and I've succeeded in my mission. We'll leave it up to other people to figure out the specifics on how to fix it.
All right, well, I wish it was better news, but we appreciate all the work that you've done to really inform the public about the dire future we face, and maybe the lawmakers will listen and come up with some specifics.
And Illinois again was ranked the third worst state in the union last year. In September, we're coming out with a new financial state of the state. Watch for that on our Truth in Accounting.
September, you say?
Yes, in our Truth in Accounting and our State Data Lab. And then we have a great new exciting pension website where you'll be able to compare Illinois' pensions to other states. That'll be a new exciting part of our website.
And I should have added before we close out, you look at some of the other states. You don't look at just Illinois.
We do a financial state of the states. So we look at every single state. We do a financial state of Illinois, financial state of Indiana, financial state of Wisconsin for every single state. We did a financial state of Puerto Rico. And we do a financial state of the United States government. So, which you think things here in Illinois are bad, those are also bad news from that arena.
The reason I was going to say that is we look around. Illinois is among the worst, maybe the worst example, or in certain categories. But so many states have similar problems, whether they are to the extent that we have or not. I wonder to what extent. Again, what is the future of the national economy with these states having such economic impact if at more or less the same period of time they get to the point where they just can't pay their bills?
Right, and theoretically states can't go bankrupt. Are they expecting a federal bailout? What are they, well, we sort of say, well, maybe they are expecting a federal bailout because they're not doing things to fix things, they don't have plan B, so maybe plan B is a bailout. But there's been already laws introduced in Congress says no, we're not bailing out. We do have 11 states last year that did have what we call a taxpayer surplus. They didn't have a burden. They actually have extra money for.
What are they doing right?
Well, they actually, they only include the right revenue. They don't include loan proceeds in their and they pay their bills when they incur them. They fund their pensions. A lot of them are.
And they accurately project their revenue and then base their spending according to revenue.
Yes, they actually truly balance their budget, so a lot of them are. Oil-rich, natural resources
or
rich, were. So it's going to be interesting to see how how much
the oil
that's going to
affect. Is really dropping off.
Yeah, how much that's going to affect them. But they just a lot of them okay, we're going to have pensions, but we're going to fund them. We're going to be required to fund them. Hopefully we can get Illinois and those other states to at least start to realize that. Because if if they don't fund it, we haven't been able to have enough information to hold our elected officials accountable. Again, they've actually been giving us more government than we've been paying for. And so, if, for example, here in Illinois, we would have had to raise taxes to fund these pensions in the past, to cover the pension compensation part, would all of those people continue to get reelected? We'll never know, because we weren't given enough information to even make a knowledgeable decision on who to vote for.
One of my criticisms among the media is that so many of them are financially illiterate, and they can't follow some of these financial discussions when they're covering the government. Do you ever work with media organizations, or what would you advise those who are going in to cover government about what numbers matter and what should they pay attention to?
Well, what they should pay attention is to the audited financial statements. The budgets are, honestly, at Truth in Accounting, we do not study budgets because they're just political mumbo jumbo, and you just chase your tail around, and this number, that number, and this fund and that funded, and so we ignore them. We say, go ahead and look at your audited financial statements, and that's why we encourage, before the budget's passed, that's usually this thick, just on the top of it, put a 2-page balance sheet and income statement. Work with the auditors and the people who prepare the audited financial statements using good standards, and recast the budget using that. But instead of the political mumbo jumbo. So hopefully we can have legislators and citizens start to do that instead of the craziness that they're doing now.
All right, well, Shelia Weinberg, we appreciate you joining us.
Well, thanks for having me again, Terry.